I'm going to show you the #1 mistake that people make with their credit. So, I'm going to talk about a huge topic that a lot of people don't talk about. And a lot of people push this product on a lot of consumers. The #1 product that is a huge mistake when you're building your credit or when you're just getting into credit are secured credit cards. You don't want to have a secured credit card on your credit report, and I'm going to tell you why. Everyone wants to get to high limit credit cards. You're like, how do I get to high limit credit cards, Mike? Well, I'm going to tell you right now, those secured credit cards with $200, $300, or $500 credit limit, or my favorite, where you can make the secured limit as much as your little heart desires, they're absolutely horrendous. And you should stay away from them, because the #1 problem you're going to have is, think about it like this. If you have a secured credit card, and let's say hypothetically it caps out at $500, or maybe if you're lucky, $1,000, okay? If that credit card does not graduate to an unsecured credit card, then you're stuck with a low limit credit card on your credit report, which is a big problem. But here's the big but. A lot of people say, well, just close it. It'll solve this whole problem. No, it's not going to solve the problem, unfortunately, because any credit line or credit product or anything credit on your credit file that you close is going to stay in your credit report for up to 10 years. I'm going to clear up another huge myth while I'm at it right now. When you close an account, people like to say, don't close it. You're going to lose that average age of credit. You do not lose any credit. You have to use logic here. A lot of these people don't want to use logic, okay? The credit accounts, installment loan, credit card, whatever you close is going to stay in your credit report for up to 10 years. The payment history is going to stay there for those 10 years. As you move along and you're approaching closer to that 10 years, you start to lose that payment history, but it doesn't just go away automatically. As time goes on, it starts to disappear. But remember, it does not just poof, disappears right out the gate, okay? That's not how it happens. It's still there. It's historical information that needs to stay in your credit report because they can see it. So like if you close a student loan, yes, it's going to have an adverse effect, or when you close an account, it's going to have an adverse effect. Your score will rebound in 3 to 6 months, at maximum 9 months, but the history is still there for a full 10 years. When you look at a credit report, you can only see 24 months in front of you. Now, if you pull your annual credit report, they will pull all the information from when Jesus was alive. Okay, it's going to be like a 1,000-page report. That's the only place that you can see it. But when you look at a credit report from any other product, you can only see 24 months in front of you. So as the age grows with that closed account, it shifts over. As it's shifting over, it has nothing to replace it with. When it's open, you're building all that payment history. So it's filling in that gap. So this is why people have that theory that it all just disappears and it ruins your age of credit. It doesn't do that. That's not what happens. So I just want to be very clear so everyone understands. So if you want to close a crappy credit card, you can close that crappy credit card. Again, it will have an adverse effect, but it's still going to stay on your credit report for up to 10 years. So there's no way to just get rid of it and it's gone. It's going to stay on your credit report for up to 10 years. I can't stress it enough. It's very important that you understand that. If you haven't yet, make sure to hit that subscribe button so that way you know every time I drop new content. It's very important that you drop some comments in the comments section. If you got some questions or some topics you want me to talk about, specifics or anything like that, drop it in the comments section. I'm making a huge list of all my favorite comments so I can make content on that. Maybe I'll start putting it up on the screen or something. I don't know the question, so we can kind of answer those questions for all my subscribers. Now, if you need help, you're working on your credit, we are a full service credit management company. We work on people's credit. We have multiple different types of products, okay? We have the do-it-yourself program that we created. It's the most advanced do-it-yourself program we've ever created for a low cost of $50 a month. We create your letters. We email them to you, print them, you send them out. No modules to learn. We cut all that nonsense out. We do a full service Metro 2 program. And then we have a pre-litigation program, and we're about to release an identity theft program that is designed for people that actually had their identity stolen. This isn't for scammers or any of that nonsense. We don't play those games. We're very serious about this because some people really have their identity stolen and they really need help, okay? And always remember, hit that bell notification. so you find out every time I go live, because you never know when I'm going to pop up live. And always remember, last part's the most important. All right, so not to be negative Nancy here, but I had to cover all that stuff that you need to know about when you close a credit card, how it reacts, and all that good stuff. So what can you do instead of a secured card is a really great question. Now, there are a few credit cards out there that I need to do a full review on. So if you want to hear about these specific credit cards that are not secured credit cards that are great for you to be rebuilding with, something that you can rebuild with, okay? It's very important that this is not the same as a regular credit card. Drop it in the comments, and I'm going to make a full-fledged video about 2 to 5 different credit cards. I'll try to do 2 or 3 on that video. If you want to hear about it, drop it in the comment section so I know that everybody wants to hear about this topic, okay? Now, what's a better product to use instead of a secured credit card? Now, one, a lot of people don't talk about this, which is secured loans. And what do you mean? Yes, secured loans. Instead of putting that money towards a crappy credit card or a credit card that's not going to graduate, you can put it towards a secured loan with your bank or credit union. The reason why this is much more valuable to your credit report is because guess what? It's not a crappy credit card. You're not stuck with this credit card on your credit file, because when other credit card companies or lenders look at your credit report, they're looking at how long the credit card has been open, your age of credit, and the credit limit. So if you have a First Premier, let's say a Credit One that caps out at $500, okay, and then my favorite, what's the other one? Open Sky, okay? If you have any of those and they're all low limit credit cards, or you have secured credit cards that are $200, $250, $500, when you go apply for a credit card, let's say with Citibank, Citibank is going to look to give you a credit limit that's equal or slightly more than that, okay? Why would they want to give you more of a higher limit if you've only been handling $250 and $500 credit cards? This is why it's a big problem. This is why it's actually hurting your credit, because anything less than a $5,000 credit card limit is not really a great impact on your credit file. And if it's definitely less than $1,000, it definitely doesn't have a huge impact. All you're doing is building positive payment history, which is still good, but looking into the future to another lender, it doesn't look good on your credit file. So whenever you do a secured loan, or my favorite, like Navy Federal, people like to do the pledge loan, which is great. Don't do a 6-month or 1-year term. Try to do the longest possible, because you want it to grow that age. Because remember, credit scores grow even higher with larger age of credit. Historically speaking, people that are in the 800 clubs have 5+ years of age of credit. So if you're going to go get a credit card or a installment loan, a secured loan, you want to do the longest term possible. 2 years needs to be the minimum sweet spot that you do as a secured loan, putting your money up, and it's going to look great on your credit file because it's coming from a banking institution that's reputable, okay? It's an actual bank. This is what lenders want to see. You put your money up, you paid it, you did your 2 years or your 5 years. This is going to look great for your credit file, and if you're stuck with it for over 10 years, it doesn't look bad on your credit. There's no lender that when you go get a high limit credit card, or you're trying to get a high limit credit card, they're not going to use that and say, oh, look at all these crappy little credit cards. They've never really managed credit. This is why a secured loan is much more powerful. And when you do a secured loan with a large credit union, it has super impact on your internal credit score. So you're doing 2 things. You're building up your internal credit score, and you're building up your credit file, making it solid for all lending and all types of credit card situations. I'm going to leave you with this last message, okay? It's very important that you understand that there's only 1 credit card on the market right now that I know of, maybe 2, okay? But I haven't seen the data points for the second one, so I'm not going to mention that one. There's only 1 secured credit card on the market that currently graduates. And what I mean by graduate, when you do a secured credit card with Discover, the Discover It's secured credit card does unsecure. After 6 months of responsibly using this credit card, they're going to give you your deposit back, and then they're going to give you an unsecured line of credit. They don't close the account, they just switch the product out. When you have a secured card, it needs to switch the product out, because then you're going to close the account and then you're going to open up a new one, which can have a negative effect on your credit file. This is why, the huge reason why secured credit cards suck, because there's only one right now in the industry, which is the Discover It credit card, the secured one that does graduate. Now, in the past, US Bank used to have, well, it's still active, but I haven't had anybody use it because it's hard to attain. The US Bank Harley-Davidson secured credit card used to graduate, but there's been a lot of negative juju about US Bank, so I don't talk about them anymore because of the negative juju. So those are the only two credit cards that do actually unsecure they go from a secured credit card to an unsecured credit card. And always remember, subscribe to increase your credit score.